Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this wild trade that we're going on day in and day out. It's not crazy, but it's fun. And it is Monday, and this is the 23rd of November, 2020. So, a mixed day. But something happened after market now. The GSA has been given the go-ahead to begin the transition, all the information that the Biden team needs. That, to me, is the opening of the door by President Trump to allow the transition to begin. Now, he can continue his fight. He's not giving up his rights. But I think he has an obligation to get the next transition team in place. And what's the worst thing that happens if they're not? These people all have clearance. The worst is they've been given information. None of these people don't have clearance. So you're getting that in the market. If we go to XLK, you can see how the market is drifting. There is a move underway where the markets are going back to the older stocks and stocks that will benefit from the different virus vaccines that we're getting. Now today, we have a new one by AstraZeneca coming out, and that's got to get its approval, but it has a definitive advantage over some of the others. I have not been told, and I haven't read how much the other charges are going to be, but I understand AstraZeneca's charge per dose is $3 to $4. That's nothing. I've also been told that it doesn't have to be refrigerated. That's really important. And it has an efficacy rate of 90% with all those advantages, which to me outweighs that other 5% point where if you have to freeze everything and you're in an emerging market, where are you going to get those refrigerators, the money to get them, let alone get them out in the villages and places that you need that may not even have electricity? We're talking emerging markets. India, they don't have refrigeration capability. You would think they do. They don't. Read about it. So these type of vaccines, and there's more of them to come, that really kicks it up another level. We in America, whether we go to a hospital and they keep it refrigerated or the other part of it, does it matter? Probably not in the main cities. It certainly does in rural America. And a lot of people live in villages and towns in America, not everybody in a big city. So the money has been coming out recently of XLK, going back into JETS, going back into cruise lines. They don't have to take off today. They don't have to leave a port now, but they're going to do it in the next 4 months, 5 months, whenever it's coming. Cinemark got a lot of financing today to keep itself going. What you're seeing is they can stay closed. People realize you're going to go back to them. I don't know the deals that all the movie theaters have made with, I think it's Universal and some of the others, to release the movies in a much shorter time span, but there's probably some type of kicker in them. I only know this because I owned a movie theater, and it was another one of the crazy things I did. Should have never done it. But you learn the business, and the business is about concessions. You get a Blockbuster, you get pennies on the dollar. The first X amount of weeks, you got to put them on X amount of screens. So maybe there's a way that they've done that. But in any case, that's the overall thing that I see going on here. You have lower highs, lower lows. That is bearish, not bullish. But the market is over the 18-day moving average of closes, the MAC. When you're over the 18-day average, your bias is up. Think of bias as the filter on the swing line. The swing line is bearish, but the bias is up. The two wipe each other out. Close under the 18-day average. The bias is down. The swing line is down. You're in the bear camp. Does that make sense? I hope it does. The resistance in the market, you hit it once. Remember what we talk about? You get an opportunity at Bollinger Bands, and if you don't take it, you don't know if it's going to offer it again and again, or if it's going to just get up there, and that was it. People that didn't take advantage of this way up here in the 124.5, 125 zone, you're $7 lower than that. That's a big play. So that's my attitude on Bollinger Bands. When we take a look at momentum, it's down. So what I have is momentum down, the trend down. The only filter left up is the being over the 18-day average, close under 118.69, and I think the bears take the market over. get back over 120, 150, and all you've done is you still keep the lower and low, higher high, but at least you negate the downtrend. In SMH, the market has a different pattern here. While this is a semiconductor, it's embedded. When you're embedded, until the red line closes back under 80, my approach is that the market's going to get bought, looking to get up to the upper Bollinger Band until the market loses the embedded reading. Now, does the Bollinger Band have to be hit? No. Window envelopes, that term, window envelopes come into play. I can't show everything on these charts. There'd be too many lines. In my morning subscriber video for futures and in my afternoon for these markets, I bring on the window envelopes. And a window envelope turns out to be a deviation from the 18-day average of closes. Unlike a Bollinger Band, it runs parallel to the 18-day average. I developed a technique with swing lines to figure out where to put them that suits me. Everybody has a slightly different approach to it. Kramer uses them. I was looking at him do it. I saw some other traders on CNBC. Remember they used to have that end of the day, they do their chart analysis? They dropped that, but it's quite good. And I wish they'd bring it back because some of the people were excellent on it. In XLI, you can see you've got the market with an embedded reading. Am I bearish? No chance. Lose it, I am. Don't lose it? No. And by the way, am bearish? That would only be if you lost it. I'm looking for the 18-day average. Until it's lost, I tell you, I think the pros are buying this market, looking for higher numbers. You're going to say to me, Ira, where are they buying it? And I'm telling you, there's another moving average I don't show here. They're in my subscriber video. And we had today, we did our webinar. Go look at the webinar and you learn a bit. Now, when you look at the webinar, you're gonna have to pay a fee to see it if you've already gone through what we call your free views with us. If you pay the fee, it's the same price as being a subscriber. Got what I'm trying to do? I'm trying to get everybody moved to the next level. I can't do it, and a lot of people are determined to stay for free. I get it, but that doesn't mean I'm going to give you everything. I'm going to give you what I think you should have up until that point where it's the next level. You don't want to take out 3481, but if you keep the embedded reading, I'm still bullish as can be. What else has this market done? It fought a battle at the 200-day average, and now it's gotten over it. Often, when you get over a moving average, if you fall back, what was resistance becomes support. So that's one of the areas that might be support here. QQQ, not surprised it's losing ground. This was the stellar performer for 9 months. This kept the markets alive. All the FANG stocks, everything that's in this. Tech was it. Today, the market is looking at the tunnel. And I see light for the first time down that tunnel as I've got my telescope and I'm going, whoa, that train is coming, and that train's got COVID vaccine all over it, and it's going to change the landscape. Markets don't wait for the landscape to change. They go with the change before it happens. So you're getting a rotations out of sectors into other sectors. That's the best way to explain it. The emerging markets. Everybody that I look at on TV wants to be long this, including me. I just see this market as being one of the stellar performers eventually in this. And now that we have this COVID, I'm really fundamentally in that camp. I don't let the fundamentals dictate my chart analysis, ever. Every time you do it, you're going to be wrong. That's what I learned. I learned that if you flip two balls in the air, one has yes, one has no, I know the odds are you're going to be 50-50. I seem to never be 50-50. I'm the loser. If I go back to the disciplines I know, same thing. If I play blackjack and I break the basic disciplines, I lose. There's a time maybe where you break them in that type of gamble, but you understand what kind of bet you're going to run and everything else. I mean, it's all odds, right? At the end of the day, there's the house. They're going to be the big winner. In trading, you can be the big winner. Why? For every loser, there's a winner. It's different. The houses with free commissions, get serious. GLD, lower high, lower low, To me, this is the cover short area. You're oversold into the Bollinger Band. You missed it by 17 cents. I think you'll have it first thing in the morning, but look at the futures. That'll tell you. Right now they're down several dollars, so that favors that hitting it at this point. The gold miners, people keep telling me, what about the miners? I had one person in the event today that had bought, I guess, one of the mining stocks or something. The miners are out of favor. We don't have the inflation yet. Miners need the inflation. That gold isn't going to go anywhere that's in the ground, but it's got to be brought above ground, and you've got to get the market wanting it above ground. You don't have it right now. People want to take risk. This is a risk environment, not a defensive environment. And this market really didn't do all that well as a defensive play. Bitcoin did. Not gold itself. Bitcoin outperformed gold dramatically. This is a cover short area though. Why? You're getting to the Bollinger Band in an oversold condition. Your first challenge to me under the 100-day average. Can it go lower? Sure. You asked me what I think though, and I think it's a short covering area. In TLT, the trend remains to the upside still, but very overbought. I question if it's going to be able to get up there. I'd be very protective of any profits you have right now. Be on the wary side. This market's stalling in front of it. I've seen this happen over and over in this market. It doesn't seem to make the upper Bollinger Band. Prudence says take your money. You know, when you get that close. I don't know what you're doing. I'm not advising you. But do you not see what I'm seeing? You got to go back months before you hit it. The market stays away from it. Recognize those things. Nothing wrong with being long the play, but then you say to yourself, okay, it's missed before. It seems to be stalling out. Where do I want to take my money? Watch, I'll tell you, hey, maybe you take it and it keeps going. Doesn't matter. FXE, a big reversal day to the downside. It had been overbought. Now it's in the process of trying to correct it. Let's get it to correct it. You're still pretty much in a broad sideways action of staying mostly over the 18-day average. No longer an uptrend, I can tell you that. So I look at it all, try to come to ideas for you, and that's the hardest thing. So my idea today, pretty simple. If you want to see what we did in the webinar, go to our website, www.iraepstein.com. Under Education is today's webinar. If you want to see it, if it tells you got to sign up and pay for it, stop. Become a subscriber first. Go to the research section, then go to that. I promise you it'll be free. If not, we'll give you your money back anyways. It should be if you sign up for that. I'm Ira. You have a great day. I will see you all tomorrow. Take care.